Happy Friday, traders. It is Friday, the 17th of November, 2017. It's 8:03, coming at you from the Chicago Financial District. Thanks for joining me again for another Trader Bite. It's another Friday, another week that's done. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a mixed bag this morning, with the Russell being the laggard, as we would expect. The Russell had a good pop up yesterday and ran through, almost got to 1493, but this morning it is down 4.4 points and is trading at 1481.9 on the CME. Remember, the volume on the CME is a lot higher than it is on the old ICE contract. You should be trading the CME version if possible. Followed by the Dow, which is down 47 points, and then the Euro stocks. The dollar is also taking a hit this morning at 93.74, down 0.12%. And then the leader this morning is crude oil. Remember, crude, we're trading the January 2018 contract. It's at 56.08, up 73 cents or 1.3%, followed by gold at 49 cents. A lot happened yesterday. The House of Representatives here in the U.S., the large legislative body, passed the tax reform bill by a measure of about, I think it was about 20 votes or something like that out of 500 or so, and that moved the bill forward. It's an interesting tax package. If you haven't, if you're an American, and uh, doesn't matter where you are because you're taxed globally. If you're an American, you probably should read up on what's in that thing. I'm not a fan, but we'll see. We'll see how the market plays it. Other than that, the other news really isn't impactful for us. You could always look up what's going on. Bitcoin again is crossing the $8,000 mark, across 7,000 about 2 or 3 weeks ago. The thing is, looks to be heading for an even 10 grand a Bitcoin. Quite the market there. But other than that, as far as what we're expecting for today, we already got housing starts and building permits. Nothing ahead of us today as far as economic releases. I don't see speakers on the calendar. I don't see earnings after the market. It is likely to be a quiet one today. So that's how things are shaping up today. Here's what we expected yesterday. Yesterday, we expected a small dip into the prior day's range. We were gapping up on the open, and the expectation overall was for the market to hold steady, hold above the prior day's range, Wednesday's range, and then we expected an impulse up that is likely to get tangled at 25.82. 25.82 is the extent to which I expected the rally to go, somewhere around 82, 83, and then to sit sideways and sell a little bit on the close as the intraday margin traders are balancing out. And so that's what was expected. Secondary hypothesis, a market that pops up, comes back to retest the gap zone, and then it goes sideways. That did not happen. And definitely what didn't happen is a market that pops up, finds the sellers around overnight high, and then drops back into the range to get stuck at 64, the naked point of control, the prior weekly low, and then sitting in the range forming a balanced profile. Here's what actually happened. There it is, quick pop into the MC point of control, and then it just pushed into the 82. You can see the 82 getting banged up against, and then we consolidated a while at 82, and then we found the energy to push all the way up to 89.50 with the tax reform plan release the market just took a stronger push higher. Volume yesterday was pretty strong, was relatively strong, um, given the most recent 20 days average. Overall, the market's recovered some of its losses, and as I said earlier this week, be suspicious of these V bottoms. Let me push this to the back so you can see it. Send to back. Be suspicious of these V bottoms in the market. This is basically the market indicating that it is fighting off selling, and it's doing a good job. This is an indication that this is a good job of buyers defending their positions and finding participation on the other side. Yesterday's profile, multiple distributions, the IB down to 2580. Remember 2580? I've talked about 2580 quite a bit in the last couple weeks or so. 2580, if you look at that line that I'm drawing here, it slants down, but in the 2575 to 2580, hang on, let's draw this right. I can't draw straight with this tool. 2580, yeah, let's see if we can get a line going here. You can see that there's a fair amount. It actually goes something like this right here. There's a fair amount of support and resistance that played out in that area. And then yesterday, the upper distribution where the market found balance on the push up started from 2580, giving us another low volume node. We get a composite low volume node at the 2580 or so. Again, that's likely to be an area that the market tests and retests, extending this profile forward. Even though we've come out of this balance zone, we see that we have our 2577 still in control. And then the larger profile, if we look at the bigger picture and shift that forward, we've built higher. We've built into the middle right here. We started to build into the middle as you see the profile on the left changing. We built into the middle, and then we dropped to test lower. So see the volume lower than the point of control moving. Point of control shifting up yesterday, and then we're building higher again. And to me, this is a market that has gone through the 2580 area, has tested all the way down through to 2560 or so, the bulk of the volume, and is now up here and filling this in. And so overall, this looks like we are it looks like we are setting up to push higher, in my opinion. So that's how things are shaping up. It is I've got to tell you, it is Friday, so I'm going to ramble a little bit. It is a tough read. I find this manipulated kind of trade to be not only it just makes it very hard to see what the auction really looks like. It's a lot like when a company puts out a product and it manipulates market prices by purchasing its own product. That's what it seems like. We're not, in my opinion, we are not seeing a true auction on both sides. This is almost like an eBay auction. It's what it is. It's a one-sided auction in many ways. We are not seeing true participation by sellers. Plainly because, in my opinion, sellers are right now programmed, and believe it or not, in my career trading, I've met many more bears than I have bulls, many more. And to me, those bears, those sellers have gotten whacked so much. They have PTSD from selling. They just cannot behave normally. And that causes That causes the market to trade in one direction. And what we would normally see, and I really don't care. I just want to see my argument here, my gripe here is um, is that the auction is not being allowed to present itself in a way that allows us to see true price discovery, and that is my entire approach to the market. I mean, it's great to trade off of moving averages or price action and stuff, but I'm going to tell you this through my own experience that if you start trading large size, and I'm talking a couple hundred, 300 lot positions that you build, um, you need a little more, at least for me, I need a little more than some mathematical formula or some mathematical based um, premise. I need the auction. I need to understand the auction and see what the participants are doing and in order to participate and have a strong hand in what's going on in the market. Okay, so when you start building a position, let's say you're clicking away with 50 lots in the ES. When you start building that position and the market's chopping around, understanding the auction, understanding where volume is participating versus just price participating with little volume, which is what a candlestick shows you. Um, when you see where volume is participating and you see consistent failure not only on price but volume, you are able to add to that 50 lot and add and manipulate your position to improve your average so that when the energy within that auction releases, and that's all we're testing here, we're testing for where's the energy, where's the price energy. We can see price on a candlestick, but volume, like you see here, tells you how much energy went into that price, how much participation went into that price, and it gives you an idea of how many people have changed hands, how many contracts have changed hands, how many people have participated. And so when that energy releases, those participants, that volume of contracts at that price start to help your position if the market releases in the right direction. And we know it's a 50-50 probability of outcome on the very next trade, but still when the market's able to rotate back and test key areas down before it starts moving up, as opposed to creating a V bottom and just being bought right away on consistent news. I mean, if you're trading without a news feed, I find it difficult. A lot of times I don't get the news in time, but the news feed tells me the magnitude of the news that's come out. And so to me, it's not testing both sides. And so we're not seeing true participation. We're just seeing a one-sided auction in many ways, just like eBay, right? A person has a product out there. They have a starting bid, and it can only be bid up. You're not aware of how many more of those widgets, iPhones, whatever you're buying on eBay. You don't know how much supply there is because the supply is not being allowed to come into that particular auction. It's just one product you're buying for that particular auction, and so the price can only push up. That's a one-sided auction. The market's a two-sided auction where supply can always come in. The third force mentioned on webinar 3 in the webinar series on my website, the third force is always present, and we cannot measure that third force because it has not participated yet, and that's really what we're accounting for when we're looking for how volume is participating. We're doing our best to guess at how that third force is going to participate once price moves out of the area. Anyway, that's besides the point. That's a mini rant, but I'm just giving you an idea of why this action is difficult to read, in my opinion, and the fact that it is a little difficult to participate in it. If we look at the overnight auctions across the board, they look pretty much the same. So the ES overnight auction, unlike the prior days, if you look here at the dark profile, this is short covering, clear long liquidation with a B-shaped profile, clear short covering with a P-shaped profile. Last night, balance, consensus. The market has come back to its comfort zone. The peanut butter is back at $3 a jar, and everybody's happy. The only difference is that last night the participation was still high, and that is likely to dry up. I'm expecting the VIX to drop. I recreated my internals chart, the underlying sectors chart in this style here, and the VIX is down here. It's the lowest pain, and you can see the VIX yesterday dropped pretty quickly and has gone sideways, and I expect the VIX to continue to participate lower. And so what we're entering into here is another period of just slow grind sideways, that sort of stuff, unless there's news. You know, there was news that the special investigator is now pushing into the deeper into the Trump campaign. We've got news on the tax bill. Now it goes to the Senate, and then it gets signed by the president to become law. All that stuff is likely to have an impact on how the market participates. But overall, we're just witnesses to a reality TV show, in my opinion. That's not a criticism of any particular party. It's just the way the system is right now. I'm not making excuses. I'm just simply telling you that it is a temporary, periodic kind of environment that we're in. It's not sustainable, um, and that I'm waiting for the market to kind of pick back up and start participating in both directions so that we can have a true auction and get back to trading as we did, you know, between before 2000 and 2016, summer of 2016. We could see some pretty good rotations, and the market rotating on both sides. This is the Russell. We looked at the ES. This is the Russell. The Russell popped up. The Russell actually opened in range at the extreme of value and with a weak high and has pushed through. The Russell continues to trade poorly to the upside. I find this product easier to read, to be honest with you, at least in a bigger picture. It's an easier product where to put a it's a riskier product because there's a lot of volatility, but it's an easier product to see what the participants want once you put a position on because it starts to move in a given direction quickly as opposed to the ES that just lingers for a while. Caution, you know, it's not suitable for everyone. But um, getting back to the ES, we have a balanced profile overnight. We have twice the volume, and the market is completely sideways. What we see in the overnight session is complete consensus on value right here in the 2583 area, and that's where we are. Let's look at our scenarios for the day. The primary scenario today is an open auction that takes back some of the buying from yesterday. I expect us to pop down, and I'm looking for an impulse up that takes us to value high and then starts to falter at that point. I'm looking for an inside day today on a primary scenario. I'm not looking for the market to run away. I'm not looking for the market to run away in any given direction. We've gotten close to the all-time high at 93.5. We were 4 points away yesterday. That's likely to remain an attraction. Again, keep an ear out for news that is likely to drive things. The secondary scenario is an open auction that tests up, grinds all the way up, and then starts to grind above yesterday's high and then falters in the 25.95 area, pushing that all-time high. This doesn't go high enough. Pushing that all-time high just slightly before the market responds with selling into the weekend. This is scenario number 2. And then finally, it is like Friday. It's really important that you hit the like button today. It does help me out. So make sure you hit the like button. And then the other thing is, next week is Thanksgiving week here in the U.S. So Monday, Tuesday, Wednesday, normal trading. Thursday is Thanksgiving Day. Friday, a lot of people don't come back to take a 4-day weekend and participate in various festivities and travel and so on. So be prepared for Monday, Tuesday, Wednesday to be a little wacky. a little wacky, and look for that. Okay, so that should set you up for the day. Good luck. Please hit the like button. Thanks for listening, and again, happy Friday. Take care.